Hey guys, what's up? Stock Retail coming back to you. Boy, it's been a minute, but I'm excited to be here and excited to have good news to talk about. That's why today's video is titled AMC is making how much more money? So we're going to talk about AMC's announcement of more debt paid down yesterday. And actually, I want to go all the way back because there's really been three big events since even just the last earnings that all impact AMC's profitability and all are a pretty big deal. So we're going to kind of pick apart what has improved in specific to AMC's interest payments. I think I've told you guys before, as we pay down debt, we're saving money on interest payments. That's less cash out the door, that's more cash in our pockets. So we're going to go through a little bit of basically AMC's improved profitability and keep that numbers based and fact based as we always do. And then we'll have a couple other topics. So I'm not going to cover all of these today, but want to let you know some things that are front of mind for me, and I'll probably try to make a few more videos here soon. So these kind of would be topics you could look forward to. So I'm going to talk about today, I mentioned the recent debt refinance, but also, so that's the refinance we did. That's a little longer ago. That's back in July. But also then the debt paydown we just saw yesterday and the rate improvements, right? The Fed has reduced rates, and you saw Adam tweet about that or post about that if you're on X. So we'll kind of pick apart just the mathematical impact of all those so that you can understand that. I'm going to talk a little bit probably in the future about what I'm calling the bondholders temper tantrum. Perhaps you saw that a week or two ago, a new lawsuit. I have not talked a lot about it because I'm not that concerned about it. I only really jump in and get real vocal, like when we had some of the ape lawsuits that were a bigger deal and held up the conversion and some of that. But I will go through and read the documentation. I saw some things that honestly made me laugh. I had some sources sharing some things with me as they read it as well. And so we saw groups like Anchorage, you might remember them. We saw groups like Deutsche Bank. It's just kind of all the usual players, Millennium, some people that are just kind of no good and have continued to be no good in the years that we've been around. And so I'm laughing at them and just saying they're throwing a temper tantrum. But, AMC has a sound legal team. A lot of what happened was contemplated, and I'll talk about that in a future video, perhaps even this week. We've wrapped up Q3 as of yesterday, so we'll see the latest box office numbers come out, and then I'll just do kind of a final Q3 earnings forecast. So look forward to that probably this week. I've got the numbers already, so we'll see if I have time to make a video. That I have said, and I will continue to say, that regardless of the exact number, this quarter, in terms of the ape era, will be an all-time record. I'm seeing some people on X saying all-time record, just period, and no, that's not what I mean. There's a quarter in 2019 that we won't quite beat yet, but we're getting close. I do believe we're going to beat that a couple quarters from now. I think it might be Q2 of next year. I've got us beating that. I'll have to go back and look. But either way, this Q3 we just closed is amazing. It's probably like 6 to 8 times our best quarter ever in the ape era. So it's an amazing quarter, very profitable. We'll talk about that. I'll pick that apart and give you that information soon. And then I'll do a forecast video soon. We'll look at Q4, what's coming. You'll see today's video. I had Joker on the last slide. Here's Venom. So I'm just going to kind of pepper in some movies from Q4 to get you excited. There are a lot of really big movies. The latest opening weekend forecast I saw on Venom, for example, was it may even reach $120 million at the domestic box office just opening weekend. Now that's a broad forecast. What I saw was like 80 to 120. So I just gave you the top number, a little bullish, but whatever it is, it's going to be big. We know Joker's big and there's a few others. So Q4 looking great. And then what happens after that? And then, if you hadn't caught, FTX has begun a pretty big round of returning cash and assets, mostly cash, to creditors and in some cases shareholders. So I say creditors, but it may be also shareholders. I've been watching that just to kind of mention it here in passing before we talk about the profit improvements. The reason I'm looking at that is, it's up to $16 billion getting returned to some folks. If any of that makes its way back into crypto again, in particular, that I watch Bitcoin, there may be some upward buying pressure in, let's say, coming days, weeks, months, that is a result of that money getting sort of loosened up and returned. So just keep an eye on that. All right, so let's actually get to the math. So first off, just bottom line, you can see at the top, I'm going to do a debt walk of what AMC has done with the debt or what the Fed has done also that's impacted us. AMC has added $50 million to the bottom line yearly since our last earnings. So we just had an earnings call, early July. Sorry, that's not right. In August. Anyway, since the earnings call, basically Adam and team have added $50 million to the bottom line. You just divide by 4 and you'll get your, what is that, $12.5 million a quarter of improvement. And, just think through in that time, have you seen our stock go up commensurately? No, the answer is you have not. So while the box office has greatly improved and returned us to profits on its own without this improvement, and then while we have seen improvements in reducing our debt payments, the stock has not gone up. So that, if we're improving by really hundreds of millions of dollars a year between the box office improvement and this that I'm going to walk you through, then at some point that's got to be reflected in the stock price. And that's why that's so bullish to me. Let the manipulators manipulate all they want. They're just digging their own grave, in my opinion. We are going to win. So let's just look through it. You know that we refinanced the debt. And so I'm saying that's not quite $25 million a year. I went through the filing again yesterday and tried to piece together which pieces of debt, or you could call them tranches, which tranches were paid down, and then what new debt was created. Because a refinance, right, you pay off an existing loan, but you are creating a new loan to pay it off. And you do that because it's better off. And so you can see in this case, we're $25 million a year better off. Now, I want to just highlight this disclaimer I'm giving. There's a couple of spots in that filing where it's not 100% clear to me, and I had to guess. For example, there's some spots where it says, all right, we paid off this 2026 debt. Well, there's multiple tranches of 2026 debt, so I had to kind of use my best judgment to figure out what they were paying off with which numbers. So this is not going to be exactly right, but directionally, it's very true that I can, sort of hypothetically or metaphorically look you all in the eyes and say, we have a significant improvement to our interest payments per year, and I'm calling that a little over $24 million a year. When we see the next earnings release, there's always a page in it that tells us all of the lines of debt, those tranches. It tells us exactly the percentages of interest. It tells us how much we owe. It tells us when they're due. Maybe I'll show you guys that page sometime. It's in the earnings filings. That's where I get this. That's why if you remember when I started this channel, I said, hey, no, trust me, bros. I'm giving you numbers straight out of AMC filings. You could easily fact check me. And so we'll do that here. When the next earnings comes out, I'm going to refresh all of this, and we'll have an actual filing that'll sort of true up my numbers. So for now, it's an estimate on this line, but about $24.5 million of improvement straight to the bottom line. So that's, quarter in, quarter out. This is a yearly number. Divide by 4 for the quarterly number, but that is an improvement to the earnings. Okay, then the Fed cut rates. And we know this is just sort of more of a factual statement here. Like, this is not an estimate. Adam came out, he posted, he said, hey, this 50-point basis cut, rate cut by the Fed is saving AMC $10 million a year. So what it means is some of the debt is on kind of variable rates. It ties itself to the overnight rates. You'll see a few, like SOFR is one, the SOFR. So there's rates from the Fed that impact our interest rates. And so that's why that matters, and that's why you'll see such big economic discussions. And in theory, let's not get too deep down an economics rabbit hole, but saving money can promote spending, which then is why you talk about inflation. So when inflation was high, the Fed was raising interest rates trying to curb that. There's a whole lot of pros and cons, and you know that my point of view on central banks is not very high. I do not think highly of central banks. That's putting it nicely. But just, quick note. So you can see here, AMC is saving $10 million a year. Well, that's $10 million a year that it can, as a company, decide what it wants to do with. That's cash in the pocket. So this is actual cash I'm talking about, guys. So right here, just these two items has added $35 million a year to AMC's cash. This is less cash going out the door. It's reducing an expense. And then now we had this latest debt payment. So we're gonna go through this a little deeply, and we'll talk about it because first of all, the debt paydown, which was $153 million of debt paydown, 103 of that was from cash, and then the other 50 was from selling 11 million shares, basically. And I want to go through this because people say, dilution, right? But actually, I always tell you, it's not just dilution, there's also value creation. So we're going to talk about, in theory, what should all of this add to the stock? What should this have done? And that should show you, again, how deeply manipulated the AMC stock is. Because we've added these $50 million yearly of cash. This is cash getting added. It's a reduction in expense. So let's watch my language carefully here. It's reducing what's going out the door. But if it doesn't go out the door, it stays in my pocket. That's why I'm saying it's adding cash. But I mean, in theory, if you wanted to say adding should be like, increasing revenues or something. But this is adding what we get to keep in our pocket. That should be adding to your stock, but you haven't seen that yet. So that again is just more and more and more value getting created that is hidden in this stock. It's not showing in the stock price. That means if I'm a buyer, there's a real opportunity here. Not financial advice. This is opinion I'm giving you, but that is my opinion. So let's walk this through a little bit. So if we've saved this $49.7 million a year, I've talked to you guys a little bit about a metric called price to sales. Once we turn to sort of yearly, what's called a trailing 12-month positive earnings, then we're going to start using a price to earnings ratio. AMC is going to be growing very fast. So I would even expect perhaps we end up with like a 30 price to earnings or something starting to be higher. 20 is kind of a magic number with like the S&P 500 over the years, 19 to 20. In 2018, I did a video once where I showed you AMC was at like 24 price to earnings. When a company is growing, that number goes up higher, and then you start talking about a price to earnings over growth, a PEG ratio. So I'm just telling you, this 25 years price to earning is a sort of middle of the road, in my opinion. I think we could perhaps see a much higher valuation over the next couple of years as well. So I want to just give you kind of a mid case so that no one can accuse me of sort of overhyping. So let's just call it roughly $50 million a year, 25-year price to earnings. So if we've added that to earnings at a 25-year price to earnings, we've got now 372 million shares with this additional 11. That should add, you can see right here, $3.34 a share. We should have added, this is value creation. If you value 25 years of this increased earnings at how many shares you have, it should have added $3.34, these three items combined, because they've increased our earnings. That should show up in the stock. And even post-dilution, accounting for dilution, that should have brought us up 73% versus this was now yesterday's close. I was using that 455 from yesterday. Okay, so when people holler at you about dilution, and I'm going to go through another walk here in a few minutes to just really hammer this point, they're never talking about or acknowledging the value creation side of the equation. They're only yelling at you about dilution. And I want you to start learning the math on being able to push back and say, you're just either you don't know what you're talking about or you're just a straight up shill and I'm kind of done with you. Because we added this $50 million a year of earnings. This is cash we will keep in our pocket. That should show up as value in the stock. That is outside of and after the dilution. And so you've got to add that back in. Okay, so you guys get it? So this has added a ton of value to AMC. It's, we should have gone up by 70%, guys. And I'm not even talking about the actual value of the company or the value of the increased box office and our increased earnings. I'm just talking about what should have been the impact of all of these reductions in our interest payments. Okay. And here's more of that walk. So just to show you that I factored it in, 11 million share dilution should have reduced us by 3%. That's 3% dilution. It should have reduced us by 14 cents. So if you combine the two, so that value creation, the 334 a share, but the reduction because of dilution, you've got to spread it out across more shares. Really, we should be up by $3.20. So versus yesterday's close, because I never saw any of this get added to our stock. In theory, this should have added, we should be more like 7 plus just from this, right? So I am not talking about the actual value of the company. Okay, so this has added $50 million a year of earnings. We are continuing to improve versus even all the other value videos I've talked to you about. Let's keep going for a minute. So on this note of, we had the rate cut, the middle item here, right? We had the rate cut that added $10 million a year to our earnings. We get to keep that straight to the bottom line. So what about future rate cuts? Adam said each rate cut, each quarter point rate cut is $5 million a year to AMC. And I just did the math for you again at that 25-year price to earnings PE. That should add, a little over 30 cents a share. Every time these guys cut rates, that's basically worth roughly 30 cents a share to AMC. You can see why the stock market likes lower rates. It makes financing very, very cheap is what happens. And it in theory should spur consumer spending as well. You get into mortgage rates and credit card rates and a lot of things that free up the consumer dollar. That's why companies like that. But you and I, the flip side, if our bread gets more expensive, that's a problem. So that's why we continue to talk about inflation. And one of the reasons you've heard me say I like Bitcoin, but that's a different topic for a different day. All right, so here's an example from, you can see this was a post from Yahoo Finance talking to someone from Morgan Stanley who says, they have the freedom to cut rates at this point, even another 15 basis points more this year. Now that's Morgan Stanley. And this is, media, it could be clickbait. So take it with a grain of salt. But I'm seeing this discussion out there. You can see there's basically investment vehicles that bet on, our rates going up or down. There's all kinds of sort of prognosticators and forecasters. And generally, the mood seems to be that there may be more rate cuts. Well, just keep in mind, every time there's a quarter point rate cut, that's $5 million a year more that stays in AMC's pocket. That's cash. That's cash that doesn't go out the door that we get to keep. I know I'm saying that a lot, but I really, really want everybody who follows me to just understand how this works. And to be excited, because that means perhaps we're going to improve. And so when you see my past videos on AMC's earnings forecasts, you can start to add these numbers on top of those. And they were already really bullish. So another topic that we saw that touches all of this in terms of interest payment reductions and debt reduction. If you didn't see, go find a video. It's on Variety. So like Variety, kind of, the magazine and the sort of news organization, sort of a Hollywood news organization. Look for just like Adam Aaron Variety interview. And you're going to find a video from just last week. I had posted about it. Apes were talking about it all over the place. Adam said, if we get to 566, there's another $400 million of debt that's going to flip to equity. Now, I want you to know ahead of time, and you'll see this table over here. Notice I've got this dilution row. Debt to equity means you're flipping debt into shares. And the person who held that debt, the bank or the investor who held that debt, now is saying, you don't owe me money anymore, but I get shares for that. You're trading the debt for shares. That is dilution. So we're going to talk through that, but we're going to look at the value creation and the actual value that should be adding to our company. Okay, so let's look at that here. I had done a whole video on this. This was the refinance. So go find my refinance video. In fact, at the time, I think the title of the video is something like, did AMC just pay off $400 million of debt? And this was, 6 weeks ago or whenever I made the video. And I got trolled. People were like, oh, this didn't age well because it didn't get paid off that day. And granted, I was wrong in terms of it didn't get paid off right then. I had said it because I saw this debt to equity flip in the filing. And I saw some people like Mudrick, I think, and some others. I can't remember who off the top of my head. There were some investors who suddenly were showing some large increases in AMC shares. And so I was wondering at the time if it had kind of already happened. But you'll see this video in Variety. First of all, it's a great video. It's Adam talking for like 24 minutes. So go hear the boss. Don't hear it from me, hear it from him. But he says, hey, there's another 400 million that's going to flip. So I think that may be related to why we've been so frozen solid for 3 months. Since the refinance, we've been stuck. And I think these guys know we're about to pay off a huge amount of debt. And so you're just seeing over and over, and I've told you it's going to snowball. As we pay off debt, we keep more cash in our pocket. More cash means we have more cash to pay off debt. And then we pay off more debt, and now we have more cash. And so you see how round and around that goes. So let's look at that. If right now we're at 372 million shares after yesterday's additional 11, say we're at 566. Well, that's a market cap of basically $2.1 billion. And then let's factor in this dilution. So we flip $400 million of debt. By the way, I do believe that'll be done at a discount. There was some language in the filing, and I have to go back, but there's some language about, I think, that being at kind of a discount. So I've got to go look at that. But I'm just going to take it straight up at the 566. So that's 3.3% dilution, or you can see it's not quite 71 million shares. And so in theory, if you just account for that dilution, that should then drop the shares at that time from 566 to 547. So all you shills, I'm accounting for the dilution. That, in theory, should lower the price of the shares. That's what the shills want you guys focused on. But that's a 3% reduction. But how about the value creation? Let's take that 25-year price to earnings. And if, let's just say roughly, if the blended debt number across all of our debt is about 10% a year, especially since that's going to probably pay off the 2029 now. Actually, there's a little bit of 2026 debt. It's probably going to pay off the 2026 debt, this second lien, toggle, payment in kind. It's a whole thing. It's a higher interest rate. And so let's use 10%. So if you pay off this $400 million, that's $40 million a year in your pocket. Well, the way Wall Street is supposed to work, again, is if you add $40 million a year of earnings, you price in some forward view. And so let's use that 25 years. Well, that should add $1 billion of market cap. So that's just this $40 million of earnings a year that's, incremental, it's new, it's added at 25 years. 4 times 25 is 100, or 40 times 25 is 1,000. And so that's $1 billion of market cap. Well, that should then add back $1.54. Now remember, let's look at this bottom line here. This is not total valuation. I'm not talking about the total value of the stock. I'm just talking about the impact of paying off debt. How much should it add to our stock besides us being at our correct valuation? And this is your sort of anti-dilution FUD table. You want to use this. I posted something, when that was happening too, because that was what people tried to say to this. So in theory, now we've got these new shares. Let's account for them. We get to 443 million basically shares. But that, if we go from 566 to $7, we should be up 24%. So yes, you account for dilution, but you also need to account for the improvement in earnings. That is supposed to be priced into your stock. That is what tells you time and again your stock is being manipulated and not being allowed to show its value. If you add earnings, if you improve your bottom line, and by the way, I'm not even talking about the value of an improved balance sheet. We're also improving the balance sheet. We're reducing liabilities. Okay, so now your assets to liabilities ratios are all improving. And banks value that. There is technically a value to that. But your stock, time and again, does not reflect that value. So I have driven home the point about value creation for, a year and a half now, maybe 2 years. Because I want everybody to understand, well, if Adam and team have been creating value, they've been improving earnings, they've been improving the balance sheet, but your stock isn't improving. Who's doing that to you? That's not Adam. Adam's improving everything. Wall Street, the banks, the market makers, the brokers, the internalizers, the hedge funds, these guys are doing this to you. And this is what we fight, and this is why I'm not leaving until we win. So hear me, shorty. I know the value of my stock. It's simple math. And I know the value of Apes Holding, and I know the value of real supply and demand, and I know the value of you burying shorts all over the place in the derivatives market, in cross-asset trading, in tokens, in all kinds of things that you have been doing to hide your behavior. It is going to come to light. We will win. That's enough of a rant there. But what I want you to understand, guys, is always, see, shorty stops at this line. Dilution, dilution, dilution. They never show you the next 2 lines. I want you to start going all the way through. Consider the whole picture. If we add earnings, those earnings should be reflected in your stock, even at the newly diluted number. I'm including the new shares. We would still be way, way up. Okay? So this is a management team that's making good decisions, in my opinion. We're reducing debt, we're increasing earnings, we're improving the balance sheet. That's good management, and I love it. And I want you to be excited about this, because if we just paid off $150 million of debt, and soon here someday, they can't hold us below 566 forever, especially with how good our Q3 earnings were. Soon you're going to see this upward pressure as well. And eventually, the real algo drivers are going to see the value of this stock, and they're going to want a lot of this stock. I posted about that. So enough on that, but remember, it's not just dilution, it's also value creation. And I'm very excited that very soon we'll have paid off another $500 million of debt between these two things while rates are going down. All right, speaking of value, so I'm just going to bring you back. Someone had said to me, hey, I love when you kind of really go through in detail instead of just fast. I'm going to do this fast here, but the reason is all you got to do is go back. I've got 2 or 3 videos that say, hey, what's the value of AMC, and walk you through the actual sort of revenues and expenses and how those have improved and how you can look at the overall value of AMC. So just go back. If you're new to my channel, look up a playlist I've got on fundamentals. I think it's just, I think I called it a fundamentals playlist. And so that will have multiple videos that will walk you through the actual facts and figures of AMC and how I get to these numbers. Okay, so here I'm just going to show you the numbers. These are based on forecasts of how the box office is doing, how, let's say, AMC candy sales and distribution and popcorn and all these things factors in future, earnings, interest improvements on the debt pay down. So a lot of that, everything I just talked to you about, I didn't count on necessarily the 400 million, but I've got just an assumption for us to continue to pay down debt in my forecasts. All right, so based on the forecast, based on this new 372 million shares, based on a 25-year price to earnings, by just mid next year, this stock should be well over $15. And guys, I'm telling you, without a squeeze. No squeeze impacts, and that is still just barely industry recovering. Because remember, these price to earnings are a trailing 12 months. So this is looking backwards 12 months. And next August would really be results that only went through June. So it's June to June, or really July to June, 2024 to 2025. So that's the box office barely starting to recover. Then you can see if you just go out to March of 2026, I'm just timing these to when earnings get released. So that would really be the full year of 2025. So based on 2025 results, the stock should already be $22. And then another year after that, you can see what a radical jump we take when we've really started to improve the box office. 2026 looks big. And when some things have ramped up, when debt has been getting paid down, this stock should be, more than 12 times, like 15 times almost what it is, or not 15, but 13, 14 times what it is right now. So I can stick around a while, and this is all without the squeeze. So really, if you wanted to read this differently, instead of reading what will AMC's stock be, which is not what this is just a price to earnings, just very simple math based on my forecasts. What you could read this differently is there will be varying amounts of upward pressure on this stock, that it's a short squeeze, right? I mean, Adam has said, and I have said, I've said it since, I don't know, when we first started talking, I think, about the ape conversion, October 2022 maybe or something, that the best way to beat the shorts, I have it read it actually in 2021. Best way to beat the shorts is profitability. And I know Adam has said that too. So what I'm showing you really is an upward price pressure. That upward pressure squeezes the shorts. So as rate cuts improve, that's upward pressure. As debt is paid down, that's upward pressure. As the box office improves, that's upward pressure. As popcorn expands, that's upward pressure. Are you getting me? As we increase distribution, upward pressure. As we increase candy, upward pressure. This company is improving its earnings day in and day out, and the shorts have not covered. So I am not showing you anything related to the short squeeze on this page. I am showing you that the pressure is going to increase day by day by day. And there's a reason Adam said checkmate. Sometimes in chess, you've won, 5, 6, 7 moves in advance. And he knew he won, and I agree with him. And go look also at my playlist about the great unwinding. That was part of the checkmate. He beat Sam and the people doing the tokens, and he beat CZ and all of those people who were doing that to us. And we have yet to see that get cleaned up. That's part of the squeeze too. So enough tangents. The point is, this is a stock that is deeply undervalued. Any forward view is going to put extreme pressure on the shorts, and eventually, that's coming. And so go look at that on how that's coming and why in that playlist. All right, so in summary, what all's coming? I've said AMC continues to improve expenses and increase profits. That's awesome. at the time we're also improving revenues, right? So we're improving both the top line revenues and expenses, which keep more of those revenues for the bottom line. Excuse me. I've said a few times today, further rate cuts are going to actually accelerate that trend. They just improve our profitability with us doing nothing. We just sit here and suddenly we're going to keep more money. I want you to keep foreign exchange rates. FX means foreign exchange. So the dollar versus the euro in particular, well, keep those in mind. I had posted recently, and I've talked in past videos, if the dollar, let's say, decreases in relative value, this is not really inflation. It's more about currency pairings. If the dollar decreases in relative value, in particular versus the euro, so think through, AMC has Odeon, UCI. Actually, I don't know if that's the right brand, but there's a couple of brands we have in Europe. Throughout the UK, Germany, France. I see some Swedish apes out there. I love it. What happens is AMC translates European sales back into dollars for our earnings report. And so if the euro suddenly buys more dollars, think of it that way. When we're translating, it's like we're taking our euros and we're buying dollars with them, and then we put that in the earnings report. If the euro now buys more dollars, you will see our earnings go up because our dollar-based earnings will suddenly get better. So for a few years, companies who have high sales in Europe in particular, the strong dollar has effectively reduced our earnings. You have seen, like if you deep dive into the earnings and you look at like our price per ticket in Europe, it's kind of been lower. Well, the reason for that is this foreign exchange rate. And if the euro now gets stronger against the dollar, you'll see AMC's earnings improve. And again, by kind of doing nothing. That's a macroeconomic, monetary policy issue. That's nothing in AMC's control. But if you start seeing FX headwinds, it's called, which kind of drag on earnings, turn into FX tailwinds, which sort of inflate your earnings, that's yet another upward pressure on the shorts that is coming. I believe that's coming. So kind of watch it, foreign exchange rates. You'll see things like, look at something called BRICS. There's a lot of discussion on, people in China even shorting the dollar. There's people basically believe that the dollar is probably, perhaps going to have some downward pressure. We'll see. But then also, because of inflation, because of the value of the dollar, because of debasement that I've talked to you about, keep gold and silver prices in mind because AMC has part ownership of a gold and silver mine, right? So that also is going to improve our value. Bitcoin matters, I've mentioned, so I just haven't talked as much about Bitcoin in a minute. I had a fun moment yesterday. My son, his feet grew a little bit, so he had some sneakers that didn't fit, some old Jordans that he did a good job taking care of that he had bought with his own money and had kind of taken care of them. And so he took them and sold them. And he took a little piece of his sale and he put it in Bitcoin. And I was so proud of him. And I thought that was kind of cool. And he wanted to call me and tell me about that because I've, as much as I talk to you guys about Bitcoin, man, my kids are, jokingly kind of roll their eyes when I bring it up because I've talked about it so much. But my own 18-year-old son just bought some Bitcoin yesterday. So I tell you guys that sometimes so I'm, in my family, we're putting our money where my mouth is. But that is going to put a lot of pressure on shorts. Sometime research, in particular, kind of like around 70K Bitcoin, the $70,000 per Bitcoin. There's a lot of shorts, a lot. I do believe it's flipping tables. I think it's turning things around on the bankers, and I do believe it's connected to our unwinding. So I just highlight again, keep your eye on Bitcoin as well. Take a look again at my unwinding playlist, the Great Unwinding. That'll tell you a little bit more about that. Got a lot of posts on that on Twitter too, so you can kind of check that hashtag. And coming soon, I mentioned I'll talk about the bonds, I'll talk about Q3 earnings, I'll take a look at Q4 and beyond. Got a little decode for my opponents today. My revenge will be success, and hallelujah for the Raven. And you guys know we will win. So let's go.